What's up, peeps? So a lot of persons been asking me about this. I don't really thought my demography or my target audience would be interested. However, it seems that you guys are. So in this video, we'll be breaking down somewhat the prospectus for Sygnus credit investment, perpetual cumulative redeemable preferred shares. So, if you're not interested, stick around. Don't forget to like, share, comment, subscribe, tell a friend with a friend. And with that said, let's begin. Alright, you might ask why am I here so? Just come from work. Yes, today's Sunday. Just come from work and just park on the roadside somewhere. I just have to record this. Let's get to that way. First, reading this prospectus, I was like, but because to be honest, this is not really a prospectus where you as an investor really, I must say, because you know it's a preference share, so you know, say most of the how you analyze this company, you can analyze it like say is a stock per se, because it's not a stock, it's just preference shares. You are in the grand scheme of things, for lack of a better word, just a glorified lender to the company. All right, so I did make some jottings because I was reading through it. Yeah. First and first, what is perpetual cumulative redeemable preference shares? Alright, I think the best way to break it is to break it down to say what it is. So you have the perpetual means that they don't have a fixed date as to when they're going to have to repay back the principal amount. So, yeah. Cumulative means in the event that they decide that alright, they're not able to pay you guys dividend this quarter, they can just add up everything and pay the following quarter. And as you can see how that can continue be over. So there's that. Redeemable. So basically it means that the issuer has the option but is not obligated to call or redeem the shares after a specific period. So it means like you might feel like you have a preference share forever, them can call back the shares at the 15-year mark. And preference share just really means like dividend payouts are prioritized over the ordinary shareholders. It means the preference shareholders get them dividend first. And in the event the company fail, you as a preference shareholder would be one of the first that persons getting before ordinary shareholders. So yeah. But anyways, so what is Sygnus really offering? So Sygnus credit investment, they're offering a perpetual cumulative redeemable preference share, and they have two classes. Alright. So they have H and I. H and high. So the H is denominated in Jamaican dollars, and the number of shares that they're offering is 12 million at $100 each per share, and you get a yield of 10% per annum. Alright, and that lasts for 15 years. And the US one is 2 million shares are offering at $10 US per share at 8% per annum. And then same 15 years. The thing is, I don't think when I'm converting them, I'll convert it back in Jamaican dollar again, so yeah, I don't necessarily think it makes much of a difference. Then basically have the option to upsize it from 12 million shares to 16 million shares basically. And the key date is it open November 25th and it closes December 12th, which is a few days from now. And them even did actually say this, which them say the shares are perpetual with no fixed maturity and comes with dividend rights that prioritize preference shareholders over ordinary shareholders. Dividend payment will be made quarterly and it begins March 2025. Say. Alright, the reason why they come into the market is real for three reasons. One, they have they're going to repay $11 million outstanding debt. Two, cover offering expenses where they're supposed to exceed $1.375 million. You know, fees, etc. And the other one is basically to just fluff up them loan books so that they can lend more loans to medium-sized firms in the Caribbean. So yeah, so they borrow full money for lending to other companies, basically. So since 2022, Sygnus has come to the market 4 times already, or in 2024. 4 times. The first one was in 2022, September 2022 to be exact, and it was to issue a cumulative convertible preference shares. They've had these preference shares, and they have 2 tranche. Um, yeah. The another one was December 2023, and they issued a cumulative redeemable preference share again, and that had 3 tranches. One Jamaican and 2 US denominated tranche. The first one in 2022 they raised 4.9 million US dollars. The second time in 2023 they ended up raised 50.37 million US dollars. Third time they came to the market was in July, I mean this year, July 2024, and they issued a cumulative convertible preference share, 2 tranches again, and they raised 3.24 million. And then in November, which is the current one, which is their perpetual perpetual cumulative redeemable preference shares with them 2 tranches, class H and I, and the aim is to raise 1.2 billion in Jamaican dollars and US $20 million. So so they have been to the market a minute now. They've been to the market a minute now, several times. Fine, they've been to the market. What is Sygnus credit investment? Like, what do they do? Like, alright, so I'm just gonna read a snippet of what they do, and then yeah. So Sygnus Credit Limited is a private credit investment company operating across the Caribbean. It specializes in providing alternative financing solutions to medium-sized firms that may not have access to traditional bank loans. Sygnus Credit investment business model revolves around investing in structures, private credit instruments. So them lend loans, but not really the conventional loans. And I'm going tell you a few of them, maybe like 5, because they have a lot, but I'm going to get 5. So they have the bilateral notes and bonds. They have asset-backed loans. Them have, I can't pronounce this word, so they have mezzanine. And the one to look out for really is convertible debt. And then they have preference shares that they would also lend loans and get preference shares in companies. So there's that. Like as I say, one thing they can look out for, like one of their highlights, if you want to say, is that they'll lend money to companies and in turn get equity in the company, essentially. So I'm going to get equity and then now them turn shareholder, etc, etc, etc. So there's that. So how them actually make money, they make money from interest income from when the business grow that they've invested in, or acquisition or expansion. Any interest to come from that, them get that. Them also get money from fees, which is like even just to structure the deals that they're lending you the money, they're going to charge as well. So and because corporations, set up a big change. Them have capital gains, and capital gains, as I say, would be when them like lend money to companies and get equity. So they'll probably end up selling them shares back in said company and get the capital gains from that. And them have short-term investments where like them invest in other assets and get money from that as well. And lastly, I would say they do portfolio investments or diversification, where them not only invest in like Jamaica, but them invest in other Caribbean countries, and then them get for them to change from that as well. Now, evidently this video is not a long video, because as a professional role, really I must say, regardless in anything that a company necessarily does, as long as you get your money, it's all fair game, honestly. But what I'm going to do, I'm going to list some pros and cons of investing in Sygnus um, perpetual cumulative redeemable shares, and then we can just glance through the financials. All right. First thing first, the shares are attractive and like relatively predictable in the sense that so for Jamaican you have 10% that you can look forward to, and then for the US you have 8% return that you can actually look towards. All right. And because of the nature of the preference shares, it just means that if you don't get the money this month, this quarter you probably get the next quarter, or the following quarter, or the following quarter. And it's not the same for like an ordinary shareholder, because if you get a dividend this month, gotta go there, maybe you'll get it next year. So that's one of the benefits as well. The other one, as I did say, preference share is really the nature of the share is that you get priority treatment as relates to dividends. So you get dividend before. And in a case where sometimes it can be where people just like want a hedge against inflation, 10% is relatively high. So yeah, if I just somebody just want to put your money if you go on hold. Now this is financial advice, by the way, and talk to the financial advisor. But I'm just leaving some generic benefits of said thing. I think another benefit is the call day, which means after the 15 years, they actually like, other than getting the money, so as let's say each year you get 10% for the next 15 years, that's 150% return total over the course of the 15 years. Plus you end up get back your principal where you initially invest. So there is also about there's also that. And then even though it listed on JSE, normally preference shares don't necessarily move, but it have the potential to go up. So even if you want to sell all your shares, you can end up get it, so it's listed regardless. So there is also that benefit. And there are potential liquidity in the market. Like, so maybe somebody decides, oh, you want some shares, like a dividend goer, then yeah. And I think I'm gonna add another one. So the fact that they have consecutively come to the market and they have been getting the support mean that persons that have been investing in them have been seeing returns and are relatively confident that they'll actually perform. So yeah, nothing to worry about. No, no. The downside of this is the perpetual in nature, meaning that even though the 15 years might, even though when the 15 years come, the investor can't necessarily demand to get back them principal. All right, they can, you can't force them to give them. Might, but they might not. But it's like after the 15 years, you can expect, so yeah, man should get it, but must get it back. Okay, is it my dividend risk? Means a support company now make the money, and them as I say perpetual, I still can't pay it, you end up getting nothing. Liquidity risk, even though at least on JC, as I say, the preference shares, those are not necessarily traded as much. See, I might not get them. So there is that. And class H risk, which is the Jamaican denominated risk, Jamaican dollar might erode, but it is, but it might erode, and the investment basically not gonna make sense if said the dollar erode out 10, 15, 20%. So um, there is that. Remember, not too long ago, well, relatively not too long ago, like $1 Jamaican was like 50 US, and now $1 Jamaica is almost 160. So yeah, taxes everywhere. So dividends 15% tax. So I guess if you want to consider a downfall or a downside, then yeah. But one of the issues is the issuer's risk, meaning that Sygnus can have all good intentions to actually pay said share, pay dividend for the shares and everything, but suppose them financial health strain or some bad harm. However, to be fair, Sygnus credit is rated at JMB triple B plus, which is relatively stable by the Carry Chris standard. So moderate risk, you know what I mean? So yeah. So there is that. Yeah, that's it. Like honestly, it's hard to like it's hard to make a full-blown video 'cause I can't approach it like a share because you're not really a shareholder, you're a glorified debt holder. But what I'm going to do is go through the financials. Not really go through, I'm just going to look at the three main financial statements, just glance over it, and then I guess we're in this video. So yeah, so the statement of financial position is what you should expect. I guess I can mark on it now. I can write well, yeah. Do my little thing. Yeah, good man. Anyways, so as you can see, each year for the group, to be honest, as you can see, them cash reserve been a fall. However, why you supposed to really focus on it, because what Sygnus does is borrow money from people to invest it. The biggest line item supposed to be the investments, alright? And as you can see, compare 2023, 2024, they're increased essentially on both sides. So either them actually increase. So at least that. However, as I was saying to you guys, here is the preference shares, and you see respond on the under liabilities. So you guys are really just lending Sygnus money for invest and then them doing a little change off, right? So yeah, and it has significantly increased since, because as I did say, if you look at as I did say, they have made a few strides this year, and just showing on them portfolio, like 2024 financial statement not really show. So this is what they have for sure right now. So you can see it significantly jump. So they have more and more preference shares each year. But the good thing is that each year them more money, liabilities increasing too. But I never put in Excel, so I'm not really know the full margin. But you can also see that they have been retaining more money, I guess maybe for like probably edge against any possible downturn that may happen in the market. So there's that. Yeah, let me say we can't analyze it like equity, so it not gonna really make much sense. Here, so now you can see, say, well, they have made more money this year than they made last year. And by the way, guys, this is USD denominated, so though if you sell chump change, everything you can multiply by basically 158. I think that is the US exchange, so yeah. And then as it relates to cash flow, I'm not even gonna read that equity thing, because that makes sense. As it relates to cash flow, and I did explain this in a previous video, cash flow, as you can see. So here's our debt. This. So debt, and this is investments, and then this is basically why the money makes or how the money is made. How money made. Alright, and as you can see, in debt we as when proceeds from preference shareholders, which is this means how much money I'm gonna give them. So yeah, so there's no say how these are all expenses on their balance sheet. So this is financing activities. So yeah, the greatest thing is they're making more money each year than the previous year, so you guys should be fine. But yeah, that is it for the most part. Thank you guys for watching. It's a quick breakdown. Talk to your financial advisor if it is the right thing for you. I won't say, of course, don't forget to like, share, comment, subscribe, tell a friend. This was a short, relatively short video, outside of the normal comfort zone. But yeah, as always, love you guys. Catch you next video. The next video I'm doing is with Synco. I am currently going through a Synco. It's NBT that. Alright. So yeah. Peace.